Hello, ma'am. I am Anil. I just came to know that you are staying as a paying guest in our home.
Why, yes. I'm Divya. I was here for quite a few days to attend the entrepreneurship camp being held in the village.
Yes, I was aware of the camp in the village. Unfortunately, I could not attend the camp as I was out of station.
Yes, the camp was in village for the last few days to make villagers aware of entrepreneurship and self-employment. I have come here to impart some expertise on entrepreneurship here.
Oh, you are an expert in entrepreneurship. I too am interested in this subject.
That's interesting. If you wish to know more about entrepreneurship, I can help provide you with some basic information.
Thank you, ma'am. Can you give me some information as what I should know about so that I can set up my own business?
You know, Anil, that there are different forms of business organizations.
Really? What are those?
The most popular of them are sole proprietorship, then partnership or corporations.
Ma'am, can you explain each of them so that I can be better prepared?
Sure, Anil. Let's first start with sole proprietorship. Sole proprietorship are run by a single owner who is also usually responsible for the day-to-day running of the business. It is very similar to the local tel wala or local kirana store. They are both owned by a single person and he or she also does the day-to-day running of the business.
So, is this form of business is the most advantageous, ma'am?
Well, to some extent, there are advantages. Like a single owner runs the business in his or her interest. Also, all profits are taxed as personal income. However, there are also disadvantages in this form of business.
Disadvantages? What could they be like, ma'am?
The first is uncertainty of the business beyond the single owner's life. Because of this uncertainty, it is difficult for sole proprietorships to raise capital from external sources. Secondly, to cover business losses, personal wealth may be used. This may lead to unlimited liability for the owner.
Oh, there are some drawbacks in sole proprietorship enterprises.
There are always risks in any form of business. Now let's look at partnership business.
So, partnership business is more stable than sole proprietorship, ma'am?
To some extent, yes, as there would be more people in running the firm. Some can handle the day-to-day running of the business. Secondly, as there are more people involved in the business, there could be misalignment of interests. Take for example a grocery shop, which could be run by 2 or more siblings or friends. That way, all those who are into the business will have to share equal responsibilities in the business.
Now, what are corporations, ma'am?
Corporations are large-scale business with large number of owners called stakeholders. You must have heard of LIC, SBI, Reliance or Airtel. Well, these are corporations.
Are there any advantages or disadvantages in corporations?
Definitely yes. Let me tell you about the advantages first. Since a corporation is not dependent on the owners, it can easily raise capital, thereby making the corporation grow. The advantages of owners in the corporation are that they cannot lose more than what they have invested. This is called limited personal liabilities. For this reason, corporations usually have the word limited at the end of the name.
What could be the disadvantages in a corporation, ma'am?
In most corporations, managers and owners are different, which could lead to conflict or misalignment of interests. Another disadvantage would be double taxation, as profits are taxed as well as dividends. Whatever be the nature of business, one important factor is accounting.
What is accounting in business, ma'am?
Accounting is keeping track and reporting of day-to-day transactions. It is a way of checking the flow of money into and out of the business. It also keeps a record of the past transactions of the business. Another important factor is finance. Finance is looking forward. In case of emergency, where would the money come from to cover expenses?
So, in short, it is a way about planning the uncertain future.
Exactly. It also involves what investments should the business make or where does the capital for these investments come from. Now, let's discuss about liabilities, equity and assets.
Yes, I am interested to know about each of these factors.
Then, let's start with liabilities. Liabilities represent ways in which a business has raised capital or money from various entities and has an obligation to pay that capital. These may include bank loans and other forms of borrowing. Liabilities can also include cash that the business has yet to pay different entities like suppliers or to the government in form of taxes. Equity is another way for a business to raise capital, but unlike liabilities, there is no obligation to pay entities that provide capital in the form of equity. In return for providing equity capital, these entities are given ownership in the business. Assets represent various ways in which a business has used its capital. These include cash, buildings, machinery, computers, furniture, or land. Assets also include cash that the business is yet to receive from customers or clients.
Ma'am, I have also heard about revenue and cost in enterprises. Can you provide me some information about these factors?
Sure, Anil. Revenue is the income or inflow that a business generates from providing goods or services to its customers or clients. A business cannot exist if it does not have any revenues. Cost or expenses are outflows that a business must pay to those who supplies goods and services to the business, which are then used to generate revenue, as well as any taxes payable to the government. Cost also includes employees' salaries, labor cost, raw material cost, goods and services taxes like GST or income tax. Now, let's look at the various factors regarding money flow through a business. Liabilities and equity are required to raise capital for the business. Assets are used to make investments using the capital. Costs define the incur of outflows to use and operate assets to produce goods and services. Revenues are capital which is received for inflows for delivering goods or services to customers or clients. Profit is defined as revenue generated against the cost involved. There are actually two major sources of capital for any business. The first is borrowing or debt from another party. The second is equity in the form of shares or stock in the market. Let me explain both of these factors. Business borrows a loan or principal amount for a certain period from a lender. It promises to make periodic payments to the lender called interest payments. It promises to repay the loan amount, typically spread over the life of the loan. It works just like EMIs or equated monthly installment that you pay the bank every month for any loan consists of interest on your outstanding loan amount and repayment of a part of the loan amount. The important aspect of borrowing is that the business promises the periodic payment to the lenders, and missing a payment leads to default. Most banks like SBI, ICICI Bank, Canara Bank or Indian Bank offers debts. There are also non-banking financial companies like NBFC, Bajaj Finance Limited, L&T Finance Holdings, HDFC Limited, from whom an entrepreneur can borrow amounts. Debentures is another form of borrowing. This is borrowing directly from investors. They trade on exchanges like the BSE and NSE after issuance. Here, loan amount is paid back entirely only at the end of the life of the bond, which is also called maturity of the bond. Borrower pays only interest periodically, called coupon payment. Equity is capital borrowed from shareholders. Unlike debt, no promise to pay any money to people who provide capital in the form of equity. However, shareholders are owners of the business. If a business makes profit after deducting all costs and taxes, the business may choose to pay shareholders some or all of the profits. This is called dividends. No obligation or promise to pay dividends, even in an extremely profitable year. The business may choose not to pay any dividends to its shareholders. All businesses, even startups, will have equity, but not all businesses will have debt.
Thank you, ma'am, for all the information. It will surely come handy to me when I start my enterprise. Divya ma'am, I have also heard about transactions in business. Do you have any idea about this subject?
Sure. There is also a factor called recording business transactions. Without business transactions records, it will be very difficult whether the business is in profit or loss.
Can you tell me more about how the transactions are done in business?
Sure. For that, you will have to first know about the 3 financial statements used to record business transaction.
What are they?
The 3 financial statements are used to record and report a business transactions are balance sheet, profit and loss statement, P&L, and statement of cash flows. Let's first learn what a balance sheet is. A balance sheet is a record of all of a business's existing assets, liabilities, and equity. It measures the uses of capital. Capital must equal sources of capital. From that, we can derive that total assets is equal to total liabilities plus equity. A balance sheet changes all during the year as a business repays capital, raises new capital, acquires new assets, and sells old assets. However, at all times, total assets must equal total liabilities plus equity. Equity and liabilities come first in a balance sheet, followed by assets.
Divya ma'am, can you provide me with a simple example so that I can understand better about balance sheets?
Sure, Anil. To understand the concept better, let's look at a simple example. Let's say that a person Raju has 20,000 rupees and wants to buy a thela to sell vegetables. The 20,000 rupees is his equity in the business. He has provided 20,000 rupees of his own money for his business, which will be recorded on the asset side of the balance sheet. the balance sheet will show that the equity of Raju is 20,000 rupees, as he has the asset of 20,000 rupees. His liabilities is 0. Now, let's say that he pays 10,000 rupees in cash to buy his thela. The balance sheet will now show that his equity is 20,000 rupees, while his cash asset is 10,000 rupees, as he paid that amount to buy the thela. His liabilities still remain 0. The purchase of the thela is now recorded on balance sheet. From the table, you can note that the left-hand side of the balance sheet has not changed because Raju has not provided any additional capital to his thela business. A balance sheet is incomplete without a P&L statement.
What is a P&L statement, ma'am?
Well, let's look at what P&L statement is. P&L statement is a record of all of a business's revenues and costs over a certain period of time. Most often, it is calculated every quarter or every year. A business's profit is defined as the difference between its revenues and all its costs. Continuing with the same Raju Thelawala example, let's say that Raju spends rupees 2,000 to buy vegetables. This is his cost. For now, let's not worry how this will impact his balance sheet. He then decides to sell his vegetables for a total of rupees 3,000. This is his revenue or sales. His P&L statement is now can be shown as rupees 3,000 as the total revenue, while the cost of purchasing the vegetables is rupees 2,000. His profit is revenue minus cost, which is rupees 1,000. Actually, the P&L statement records all transactions on an accrual versus cash basis.
Accrual versus basis?
Let me explain what accrual versus cash basis is. In the case of Raju, the Thelawala vegetable vendor, let's say that his customers will pay him the rupees 3,000 only at the end of the week. On an accrual basis, the rupees 3,000 will be recorded as revenue on the day he sells the vegetables to the customers, regardless of if and when the customer pays him. Similarly, if he has not paid the rupees 2,000 to the person who supplied him the vegetables today, he will still have to record it as a cost on the P&L statement today itself, even though he may take 7 to 8 days to pay his vegetable suppliers. This is accrual versus cash basis business. So without the calculation in accrual versus cash basis, if transactions were recorded on cash basis on the P&L statement, in this situation, he will have 0 revenues, 0 costs and 0 profits because his customers have not paid him and he has not paid his supplier. To better understand such a situation, we need to know the statement of cash flows.
So, we also have to keep a tab on the factor of cash flows, ma'am?
Exactly. Without the statement of cash flows, it will be difficult to know how the business is functioning monetary-wise. Given that the P&L statement records transactions on an accrual basis, it is difficult to use it to understand how much cash a business has on hand at any point of time, especially for the large businesses having many transactions. The P&L statement also excludes any asset purchases or sales, as well as any capital raised or repaid. A business cannot survive for long without cash. The statement of cash flows fills this gap. Cash flows keep track of cash-related revenues, costs, investments, and financing, and report the additional cash generated or used by a business every period.
So, ultimately we can see that cash is king.
Definitely. Let's learn more about statement of cash flows.
Does cash flows also consist of many parts, Divya ma'am?
Yes, it does. Cash flows consist of three parts. Cash flows from operating activities, cash flows from financial activities, and cash flows from investing activities. Let's look at each of them to check how they work. The first is cash flows from operating activities. Operating activities include all activities related to the purchase and processing of raw materials and selling of a business's products and services. The second is cash flows from financing activities. Financing activities include capital raised through debt and equity, as well as loans repaid and dividend paid. The third is cash flows from investing activities. Investing activities include purchase and sale of long-term assets like plant, machinery, computers, furniture, as well as shares of other businesses.
Would not it be very difficult to know how the cash is flowing in a bigger business situation, ma'am?
Definitely. For that, there is a system called recording of transaction. Let's try to understand how this concept works. A large business may have hundreds, thousands, or even lakhs of transactions each day. So, it is difficult for it to keep track of the large number of transactions and constantly updating the balance sheet, P&L statement, and statement of cash flows after each transaction. Missing out even a single transaction could have serious consequences for the business. Accountants worldwide use the double entry system to record transactions.
Double entry system? What is it, ma'am?
Transactions are entered into the general journal in the chronological order, including which accounts each transaction affects. Every transaction in the general journal has two entries, a debit and a credit. For this reason, it is called double entry system, which impact at least two ledger accounts. Debits are entered on the left-hand side and credits on the right-hand side. The total on the debit side must equal the total on the credit side for every transaction.
Does that mean that the general journal looks very complicated, ma'am?
Well, no. If you look at the general journal in a simple way, it is not very complicated. This is how the general journal looks. The first entry is the date. It is the date of the transaction. Then we need to enter the particulars. Each transaction affects at least two accounts. The names of the accounts are entered here as well as a brief explanation of the transaction. Include a DR at the end of the line of the account being debited and start the line of the account being credited with a TO. Then enter the ledger folio. Entries from the journal are posted to ledger accounts. This column records the page number of the ledger account into which the entry is made. It is either debit or credit. The debit is the amount being debited from at least one ledger account. The credit is the amount being credited to at least one ledger account. A ledger account lists all increases and decreases of a particular account. Examples of ledger accounts are cash account, debt account, inventory account. Ledger accounts can broadly be classified into personal accounts, real accounts, cash accounts, and nominal accounts. Personal accounts are accounts that relates to persons like capital account, salary account, bank account. Real accounts are accounts that consist of properties of the business like cash account, stock account, patents account. Nominal accounts are accounts that consist of expenses, losses, incomes and profits. The general ledger is a collection of all ledger accounts. Now, the rule of the thumb is how to determine if something is a debit or credit.
Well, how is it done, ma'am?
The rule of thumb relies upon the personal accounts, real accounts and nominal accounts to check the debit or credit. In the personal accounts, the debit is the receiver and the credit is the giver. In the real accounts, the debit is what comes in and credit is what goes out. In the nominal accounts, debit is all losses and expenses and credit is all profits and incomes. Now again, if you look at the example of Raju, the thelawala, and how he started his business, you will understand better. Raju increased equity capital from rupees 0 to rupees 2000 and at the same time increased cash from rupees 0 to rupees 2000. Cash is a real account because it is owned by the business and it is coming into the business. Also keep in mind that debit is what comes in. Raju's contribution is capital he gives to his business and hence is a personal account that needs to be credited. Again, remember, credit is the giver. So, this transaction will be entered in the general journal, assuming that it is done on 1st January 2019. On 3rd January 2019, he spent rupees 2000 to buy vegetables and sold them for rupees 3000. Cash is still a real account. The purchase of vegetables will be credited for rupees 2000. The credit is what goes out. At the same time, the sale will be debited for rupees 3000. Purchase and sales accounts are nominal accounts. Here, the credit is all profits and incomes and debit is all losses and expenses. These transactions will be entered in the general ledger as shown on the screen. It first starts with the date, then particulars, then debit, and at last the credit, as we have already discussed. His cash account in the general ledger will look as shown on the screen. Here, the particulars and the amounts are highlighted. You can also notice that it starts with a DR and the end with a CR. This is about debit and credit. Raju's capital account in the general ledger will look as shown on the screen. The Thela account will look as shown on the screen. The purchase account will be as shown on the screen. As he had purchased vegetables for rupees 2000, it is entered to the cash account row. Raju's sales account will be as shown on the screen. As he had sold the vegetables for rupees 3000, it is entered under the particulars column along with the amount. Now, can you understand how the entries are made into the ledger, Anil?
Now I understand how business transactions are recorded. Thank you, Divya ma'am.
You are most welcome, Anil.
Divya ma'am, balance sheet plays such an important role in all businesses. I wish to know more about it.
Sure, Anil. Balance sheet as well as P&L statement plays an important role in all sort of business. Let me tell you more about both of them in greater details. The balance sheet represents the financial position of a business as of a particular date, typically at the end of a quarter or financial year. It is divided into two parts, assets and liabilities. Assets or use of capital includes all goods and property owned by the business, as well as amounts due to the business. The liabilities include liabilities, and shareholders' equity, or the source of capital. This itself includes all amounts and debts owed by the business and the shareholders' ownership interest in the business. You should at the same time remember that total assets is equal to total liabilities plus shareholders' equity. Do you know that both assets and liabilities are classified into two categories, Anil?
No, ma'am. What are they?
Both assets and liabilities are classified as current and non-current. Current refers to those items that are due in the upcoming financial year. That is, they are due within the next 1 year. Non-current refers to those items that are due after 1 year. You could think of current as short-term and non-current as long-term. Assets are classified as current and non-current assets. Current assets are those assets that are expected to be sold or converted to cash or consumed within 1 year. Non-current assets include plant, property, and equipment, PPE, which typically last for more than 1 year. Let's discuss more about the different types of current assets. The common types of current assets are cash, inventories, receivables, and short-term loans and advances. Now, let's look at each of them. Cash is the amount held in bank accounts by the business at the end of the financial period. Inventories is the value of raw materials held, work in process, and finished good held by the business. Receivables are the amounts due to the business from its clients or customers to whom goods or services have already been provided. These are typically sales made on credit. Short-term loans and advances are loans and advances given to other entities like suppliers, which are due within 1 year.
Earlier, we have discussed about a petty businessman called Raju the Thelawala. Can we apply the different types of current assets in his case, ma'am?
Sure, Anil. Let's check how all these are applicable in his case. Going back to Raju the Thelawala, remember that he sold the vegetables for rupees 3,000. Last time, we assumed that he sold his entire stock of vegetables and he received cash of rupees 3,000 from his customers. This time, let's make some changes in his business dealings. Now, suppose he was able to sell only rupees 1,500 worth of vegetables out of the rupees 2,000 worth of vegetables he bought. Also, he has an informal agreement with some of his customers who pay him only once every fortnight. In other words, he offers credit to valuable customers. He sold the vegetables for a total of rupees 2,250, for which he received rupees 1,500 in cash, and the balance rupees 750 will be paid after 2 weeks. Remember, Raju's balance sheet looked like as shown on the screen after he bought his thela. He also receives rupees 1,500 in cash from some of his customers when he sold vegetables to them. So, his cash balance is now 10,000 minus 2,000 plus 1,500, which is equal to rupees 9,500. He has not sold rupees 500 of his vegetables, which will now show up as inventory on the asset side. It is specifically a current asset. He also has not received rupees 750 from some customers. This amount will now be entered as receivables on the asset side. It is again specifically a current asset. Here is the table of Raju's updated assets. You can see that his assets starts with the amount he paid for the thela, which is rupees 10,000. Then, as current assets, he has cash worth rupees 9,500. In his inventory, there is an amount of 500 rupees, while as receivable from some of his customers, he has an amount of rupees 750 only. So, his total current assets is 10,750 only. With the worth of the thela, his total asset is now 20,750.
That was easy to understand. Now how about the non-current assets? Are there also various types of non-current assets, ma'am?
Yes, Anil, there is. Let me tell you about the common types of non-current assets. Common types of non-current assets are tangible assets, intangible assets, non-current investments, and long-term loans and advances. Tangible assets includes fixed assets like machinery, building, or land. These are commonly referred to as plant, property, and equipment, or shortly PPE. Intangible assets includes patents, trademarks, copyrights, goodwill, brand, or recognition. These are not common for small businesses and startups. Non-current investments are investments that mature in more than 1 year. Long-term loans and advances are loans and advances given to other entities like suppliers which are due after 1 year. Now, let's apply the non-current assets in the case of Raju the Thelawala.
Yes, I would like to know how it works.
Raju spent rupees 10,000 to buy his thela. This is his business's fixed asset. He does not have any other non-current asset. This is the table of Raju's updated assets as we have discussed earlier. His non-current assets is the same as his current assets. After assets come liabilities.
Are liabilities also classified differently, ma'am?
Yes, Anil. Let me tell you more about liabilities. Like assets, liabilities are also classified as current and non-current liabilities. Current liabilities are liabilities that become due within 1 year. Non-current liabilities are liabilities that are due after 1 year. Common types of current liabilities are payables, short-term debt, and current portion of long-term loans. Payables are expenses that have been incurred but not been paid as yet, but need to be paid within 1 year. Short-term debt are any loan that is due within the next 1 year. Current portion of long-term loans are part of long-term loans that are due in the next 1 year. Non-current liabilities mainly include any form of borrowing or debt or loan that is due to be repaid after 1 year.
Ma'am, you also mentioned something about shareholders' equity. How does it work?
Yes, there is this factor called shareholders' equity. Let's know more about this factor. Shareholders' equity represents the total equity interest of all shareholders in a business. It represents the net worth of the company, which is the difference between the business's assets and liabilities. Shareholders' equity consists of 2 parts, share capital and surplus. Share capitals are funds raised by issuing shares in return for cash. This represents how much capital the owners have provided to the business. Surplus is a business's profit, which comes from the profit and loss statement.
Can we apply equity in the case of Raju the Thelawala, ma'am?
Definitely, Anil. If you look back at Raju the Thelawala, you will remember that he paid rupees 2000 in cash to buy vegetables. This time, let's make some changes in his business dealings again. Suppose he paid rupees 1250 in cash to buy vegetables, and he bought the balance rupees 750 worth of vegetables on credit. He will pay his vegetable supplier the rupees 750 after 2 weeks. After buying the thela, he had rupees 10,000 in cash. He spent rupees 1250 to buy vegetables. He received rupees 1500 in cash from some customers. His new cash balance is now 10,000 minus 1250 plus 1500, which is equal to rupees 10,250. Raju owes rupees 750 to his vegetable supplier, which means payable is rupees 750 under current liabilities. He was able to sell rupees 1500 worth of vegetables for a total of rupees 2250. His profit, which will get added to the surplus under equity, is 2250 minus 1500, which is equal to rupees 750. He has not borrowed any money, and so his non-current liabilities are zero. This is Raju's updated balance sheet. Let's look at the net worth of Raju's business. The net worth is equal to total assets minus total liabilities. In Raju's case, it will be 21,500 minus 750, which is equal to rupees 20,750. At the start of the business, the net worth of Raju was 20,000 minus 0, which is equal to rupees 20,000. So Raju has added a net worth of rupees 750 from operating his thela, which is the profit from his business. P&L stands for profit and loss statement. It is also called income statement. It shows the business's operating results for the period, which could be a quarter of a year or a whole year. The net income after profit and loss is equal to revenue minus expenses. Any income or profit not paid out to shareholders is called retained earnings. Retained earnings are accumulated over time on the balance sheet under surplus on the shareholders' equity part of the balance sheet. For Raju, the surplus was rupees 750.
Ma'am, you also said about the factor called inventory. How does it function on the business front?
Yes, let me tell you about the functions of the inventory and what is it. Inventory is the goods held for sale or items used in the manufacture of products that will be sold. Cost of inventory held is reported under inventory on the balance sheet. Once the inventory is sold, it is reported as cost of goods sold. It is shortly called COGS on the P&L statement. The calculation of the inventory is made by this simple formula. Beginning of period inventory plus purchases, which is equal to COGS plus end of period inventory. In the case of Raju, he started with zero inventory. Bought inventory worth rupees 2000. Sold rupees 1500. So, end of period inventory is equal to 0 plus 2000 minus 1500, which is equal to 500. This amount of rupees 500 is entered under inventory in the balance sheet. Now, let's look at what expensing, capitalizing, and amortization is and how they affect business. In the case of Raju, you can see that the cost of the thela, which is rupees 10,000, it only appears on the balance sheet. It does not appear on the P&L statement. It does not affect the profitability of Raju's business. This is expensing. Now, why does this happen? It is because assets and expenses are two sides of the same coin. If the benefits of a cost are expected to accrue in the same period in which the cost is incurred, then the cost is expensed in that period. In other words, the entire amounts appears as an expense on the P&L statement for that period. Capitalizing means the entire amount of the cost is shown as an asset in the balance sheet. If the benefits of a cost are expected to accrue in the future periods to when the cost is incurred, then the cost is capitalized in that period. Example of capitalized expenditures: property, plant and equipment, or shortly called PP&E. Capitalized costs are eventually charged as expenses to the P&L statement. Amortization is the process of allocating an asset's value to those future periods when its benefits are expected to be earned, typically over the asset's useful life. For example, if an asset's useful life is 5 years, then 1/5 of the asset's value will be charged as an expense during each of those 5 years in the P&L statement. Most common example of amortization is depreciation, which is the terminology used for amortizing PP&E. The cost of Raju's thela will be depreciated over its useful life. If we assume that its useful life is 10 years, then rupees 10,000 divided by 10 is equal to rupees 1,000 will be the annual depreciation expense on the P&L statement for each of the next 10 years. At the end of the financial year, the rupees 1,000 will be deducted from Raju's profit before taxes are computed. SG&A expenses include sales agents' salaries and commissions, advertising and promotion, travel and entertainment, executives' salaries, office payroll, and office expenses. This usually includes depreciation expenses. Here is how a P&L statement looks. The different profit measures are shown in bold after each expense is deducted.
Thank you, Divya ma'am. Now I know so much about balance sheets and profit and loss statements.
You are most welcome, Anil. Anil, do you know cost affects the business?
Cost? What kind of cost, Divya ma'am?
Cost is the monetary value of resources like material, labor and overheads used in the making of a product or delivery of a service. In many cases, there may be no material involved in the delivery of a service. So, the involvement of cost in business varies by the nature of the business. Cost can be classified in various ways. Here are some of the ways. Some costs are based on association with cost object. It is also called direct versus indirect costs. Some costs are based on reaction to changes in activity. It is also called fixed versus variable costs. Some costs are based on classification on financial statements. It is also called expired versus unexpired costs.
Ma'am, can you explain how each of these costs work in business activities?
Sure. Let me explain them to you one by one. Direct versus indirect costs are based on their association with different cost objects. A cost object is an item or object for which costs are measured separately. Here are some common types of cost objects. Output is the most common way of defining cost objects. It is based on a business's output because a business would want to know the cost of producing or creating its output. Operational is based on department within the business or a specific operation or process. For example, a business could measure the cost of a customer service call. Business relationship is based on an entity outside the business. For example, cost could be aggregated for each supplier or customer. Direct costs are those that can directly and easily be traced to a cost object or objects. Indirect costs are those that cannot be economically traced to a cost object, and hence these costs must be allocated to a cost object or objects.
Earlier, we had discussed about the business of Raju, the Thela Wala. How does cost object works in his case, ma'am?
Yes, cost object may work in many ways when it comes to Raju the Thela Wala. Cost object for Raju the Thela Wala could be seasonal vegetables and non-seasonal vegetables, or green vegetables like beans or lady's fingers, root vegetables like potatoes or carrots, and other types of vegetables. If he starts selling fruits also, cost objects could be vegetables and fruits. The cost of fruits and vegetables are direct costs because they can be traced to the two cost objects, fruits and vegetables, respectively. Let's say that Raju the Thela Wala buys tea during winter and Nimbu Pani during summer while working at his thela. The costs of tea and Nimbu Pani are indirect costs because their costs cannot be traced back to the two cost objects, fruits and vegetables. So, the costs of tea and Nimbu Pani must be allocated to the two cost objects.
There are also fixed versus variable costs. How does it works, ma'am?
Let me tell you how. To understand how costs change with output, it is useful to classify costs as fixed and variable costs. Costs that do not vary in the short term regardless of changes in output levels are called fixed costs. Costs that vary with the output levels are called variable costs. For Raju the Thela Wala, the cost of his thela is fixed because it does not depend on how much fruits and vegetables he sells. The cost of fruits and vegetables sold is variable because it varies with how much fruits and vegetables he sells.
What about expired versus unexpired costs? How does it works in business, ma'am?
Expired versus unexpired costs calculation helps to check how the capital is being used. To determine if a cost should appear on the balance sheet or income statement, it is useful to think of costs as expired and unexpired costs. Expired costs are those that have been completely consumed or the benefits from which have been received by the business. Unexpired costs are those that have not been consumed fully as yet and have some residual value. If you look at the P&L statement, you will notice that all expenses are represented as expired costs, whereas assets on the balance sheet represents unexpired costs. In the case of Raju the Thela Wala, the cost of fruits and vegetables sold are expired costs, as they will show up as cost of goods sold, simply called COGS on the P&L statement. The cost of fruits and vegetables not sold as yet are unexpired costs, as they will show up under inventory on the balance sheet. The annual depreciation cost of his thela will be expired cost and hence recorded on the P&L statement. The value of his thela net of depreciation cost will be the unexpired cost and hence recorded on the balance sheet. This unexpired cost of the thela will reduce by the annual depreciation cost every year on the balance sheet. If we assume a 10-year useful for the thela and an initial cost of rupees 10,000, its unexpired cost will be rupees 9,000 after 1 year, rupees 8,000 after 2 years, and its unexpired cost will be 0 after 10 years.
Ma'am, does all inputs in a business can be converted to sellable outputs?
Yes, of course. Let me elaborate the degrees of conversion to you. Almost all businesses convert or modify inputs to a sellable output. Inputs typically consist of raw material, labor, and overheads. The cost of conversion is dependent on the degree of conversion done by a business. You could think of 3 degrees of conversion: low, moderate, and high. Providing convenience to customers in terms of location, timing, and variety with almost no physical conversion of inputs is termed as a low degree of conversion. In the example of Raju the Thelawala, he provides ease of access in terms of location and timing to fruits and vegetables for his customers. Some amount of visible conversion to the output is termed as moderate degree of conversion. For example, Raju the Thelawala removes unnecessary leaves, roots and stalks, washes and packs the fruits and vegetables in plastic before selling them to his customers. A major transformation from input to output is termed as high degree of conversion. An example of this would be a two-wheeler company like Bajaj Motors or Hero MotoCorp. They take inputs consisting of various parts of a two-wheeler made out of metal, plastic and glass and convert it to two-wheelers motor vehicles. Retail companies like Reliance Fresh, D-Mart, Big Bazaar have low to moderate degree of conversion. Manufacturing companies like Bajaj Auto, Hero MotoCorp, Amul, Asian Paints or Bombay Dyeing Textiles have a high degree of conversion. Product costs are the key determinants of the cost of goods sold or COGS, which appears on the P&L statement. They represent the cost of items or services used to generate revenues. The 3 main components are direct material, direct labor, and overheads. Let's discuss about each of these factors. It is the cost of any material directly used in the production of the output. For example, for a two-wheeler, it would include the costs of engine, fuel tank, shock absorbers, mirrors, handlebar, wheels, or tires. Direct material costs are significant for manufacturing companies like Hero MotoCorp, Amul, or Asian Paints. Direct material costs are low or insignificant for service companies like Infosys, Wipro, State Bank of India, or ICICI Bank. Direct labor costs refer to the cost of individuals involved in manufacturing a product or delivering a service. The cost includes salaries, bonuses, insurance, pension benefits, earned leave paid to the individuals involved. It typically does not include overtime costs paid to the individuals. It does not include salaries of executive, salespersons, commissions paid to the sales team, advertising, utilities paid for the administrative building or any other structures constructed for business purpose. These are not directly involved in the manufacturing of a product or delivery of a service. While direct material cost and direct labor costs are direct costs, overheads costs include indirect costs incurred in the manufacturing of a product or delivery of a service. For example, in the manufacture of a two-wheeler, it will be very difficult to keep track of the exact amount and cost of glue and exact number or cost of screws used. The cost of glue and screws will be indirect costs. But the cost of these must still be included under product costs. To know how these costs are calculated, we need to know about cost allocation. As we have already discussed that indirect costs like overheads cannot be easily traced back to a product or service. Hence, businesses need to allocate these costs to each product or service, or broadly, each cost object. Cost allocation is a method through which a business allocates or distributes an indirect cost across various cost objects. There are 4 parts to cost allocation: cost pool, cost objects, cost driver, and allocation volume. Let's discuss about each of them. Cost pool. This is the total indirect cost that needs to be allocated across cost objects. Cost objects, as we already know, is divided into direct and indirect cost. Cost driver is defined as some attribute or characteristics that we can measure for each cost object. Allocation volume is the aggregate of the cost driver amounts across all cost objects. The steps in cost allocation are determined by overhead rates. The overhead rate is the amount in the cost pool divided by the allocation volume. To know the allocation of cost, multiply the overhead rate by the number of cost driver units in each cost object.
Ma'am, can you explain how the cost allocation works in the case of Raju the Thelawala?
Sure, Anil. Let's see how cost allocation works in this case. In the case of Raju the Thelawala, tea and Nimbu Pani are indirect costs that he incurs. Now, how does he allocate the costs of tea and Nimbu Pani to the cost of fruits and vegetables sold? To know exactly that, we need to identify the 4 parts of cost allocation. First would be the cost pool. Let's say that he spends a total of rupees 20 on a given day to tea or Nimbu Pani. Next are the cost objects. Raju has 2 cost objects, fruits and vegetables. After that comes the cost driver. Raju takes the total kilograms of cost object sold as his cost driver. Cost drivers are the number of kilograms of fruits and vegetables sold. At the end, we need to know his allocation volume. The allocation volume is the total kilograms of fruits and vegetables sold. Let's say that he sold 10 kilograms of fruits and 15 kilograms of vegetables. So, allocation volume is 25 kilograms. The overhead rate is the amount in the cost pool divided by the allocation volume. 20 divided by 25, which is rupees 0.80 per kg. Cost allocated to each cost object. Fruits, 0.80 multiplied by 10, which is equal to rupees 8. Vegetables, 0.80 multiplied by 15, which is equal to rupees 12. So, the rupees 20 indirect cost has been allocated as rupees 8 to fruits and rupees 12 to vegetables cost objects.
That was very knowledgeable, Divya ma'am. Thanks for all these information.
As always, you are most welcome, Anil. Anil, do you know how entrepreneurship can create a huge impact in a nation?
No. Divya ma'am, how can entrepreneurship ever can make any impact on a nation?
Let me tell you how. First of all, entrepreneurship can create goods and services on both national and local scale. Entrepreneurship creates jobs everywhere. For this reason, the contribution of entrepreneurship just cannot be measured in purely monetary terms. Entrepreneurship creates a product or service of notable worth, while at the same time it builds a substantial customer base. The benefits of entrepreneurship actually span economy and society, leading both to prosperity. Entrepreneurship also helps the local economy. The success of entrepreneurship in the local market creates a vibrant economy. This itself creates wealth as well as jobs for the local population. For the nation, entrepreneurship helps the national economy scale for the government, which is taxation. Entrepreneurship can create a product or service that adds value to the lives of its users. Innovation at the base level of business can push a market forwards on domestic and overseas. This can only be done by vibrant entrepreneurship. So, one can say that entrepreneurship is a key driver of economic growth. Many industries and economy are at ale at times. So, by risk-taking entrepreneurship, it can rejuvenate ailing industries and economy. It can also spur governments to create an effective economic and legal framework. Successful entrepreneurialism often requires the skills and labor of many people. As a thriving business grows, so do the opportunities for others, and the cumulative impact of new startups in a particular geographical area will go a long way towards creating new employment opportunities.
Can entrepreneurship help in creating value in the socio-economic front, ma'am?
Sure, Anil. Let me tell you more. Entrepreneurship leads to high growth of economy in the local level. This, by itself, creates a value system in the local economy. This value system from lot of local economies helps in the culmination of a value system for the entire nation. Next, entrepreneurship helps in the growth of small business. This leads to more job opportunities in the local level. The success of entrepreneurship often results in social entrepreneurship, as more and more people became interested in setting up their own business. This creates a long-term impact on society. Let us now discuss about negotiation and persuasion.
Negotiation and persuasion, are they not the same thing, ma'am?
Well, no. Negotiation and persuasion are two different factors actually. Let me explain both of them to you. Negotiating is the ability to discuss and reach a mutually satisfactory agreement. For example, you arrive at an intersection with 3 other cars. How do you decide the order of the other cars to go through the intersection? This is where negotiation comes in. Everybody mutually negotiates who goes first. Persuading is the ability to convince others to take appropriate action. An example of persuade is when you make a strong argument for why your idea is right, and your argument convinces your boss or other members in your organization to implement your idea. There are actually 2 types of negotiation: distributive and integrative. Distributive negotiations can be thought of as disputes over a fixed pie. Negotiating to divide some limited resource. You win, I lose, and vice versa. Integrative negotiations can be assumed as a dispute where there is an expanding the pie argument. Integrative negotiating helps to expand resources so that everyone wins from the outcome that is achieved through the negotiations. Integrative negotiations are based on a win-win perspective, where there is a benefit for everybody in the negotiations. Now, what are the key elements of entrepreneurial negotiations? The key elements of entrepreneurial negotiations are creating value, building trust, dealing with emotions and perceptions, and at the same time protecting long-term relationships. Let's discuss how each of these factors helps in entrepreneurship. First of all, distinguish between interests and positions. Always participate in negotiation simulation. It will help to diagnose your strengths and weaknesses. After that, learn the steps involved in creating value. Develop a personal theory of practice with regard to the elements of entrepreneurial negotiations. Before you can create trust, first diagnose personal strengths and weaknesses to improve negotiating skills. Use objective standards to build trust. This will help you to build trust in entrepreneurial negotiations. Learn how contingent agreements can be used to reduce uncertainty. Review the psychological dimensions of entrepreneurial negotiations. Know when to walk away from a deal which may not be beneficial to you. Learn to calculate the worth of competing offers so that you don't stand a chance to lose. While winning at win-win negotiation, learn the essentials of win-win negotiation. Understand the dynamics of venture capital investing.
Ma'am, is there a process from which we can learn how to negotiate?
Why, yes, there is a process from which we can learn the art of negotiations. Let me tell you more about this process. Before you negotiate, first research the other side or the other party and what exactly they wish for. At the same time, understand your BATNA, which means best alternative to a negotiated agreement. This by itself means the walkaway position, by which you can leave the negotiation table without any loss. Always try to assess true issues in negotiations and not superficial. Determine important issues first. Pre-think solutions to dead ends, exchanges, and prepare end goal statement. While in the negotiations room, try to build rapport like emotional, posture, tone, and key goal. Then try to understand their BATNA. Identify the needs of other party like what is essential, what is important and desirable. Compare the two to understand what is shared, what is independent, and what is conflicting among everybody. Let me cite you an important quotation about innovation from Peter Drucker, a management consultant from America. Drucker in 1985 has said that innovation is the specific tool of entrepreneurship, the means by which they exploit change as an opportunity for different business or a different service. It is capable of being presented as a discipline, capable of being learned, capable of being practiced. Entrepreneurs need to search purposefully for the sources of innovation, the changes, and they need to know and to apply the principles of successful innovation. Many would ask why we should practice innovation. Well, innovation helps to develop the ability to regularly produce new and/or innovative products or services for personal and societal gain. Innovation helps to create a sustainable business with innovative products and services. Innovation helps to acquire the speed and agility that are needed to exploit new concepts, approaches, and practices to achieve market advantage.
Ma'am, can you tell me about some specific methods which successful entrepreneurs practices?
Sure, Anil. There are some specific practices for all entrepreneurs. Let me tell you about these practices. First of all, how can we develop ecosystems inside organization to promote entrepreneurial activities? How can we make entrepreneurship a mainstream subject rather than sequestered activity? The answer lies in building a vibrant core ecosystem. Entrepreneurial leaders develop entrepreneurial ecosystems inside organizations to promote entrepreneurial activity as a mainstream strategic activity. Entrepreneurial leaders influence others to think individually and differently. They inspire others to embrace extreme uncertainty. Organizations are not entrepreneurial by itself, as all organizations are made by people. The people in the organizations can be entrepreneurial. Organizations don't create people. People create organizations. This means organizations don't fail. People fail. Organizations do grow, but not without the ingenuity, creativity, resourcefulness, action, and leadership of the people inside. To make an organization successful, you need to join a tribe. It is because entrepreneurs need membership in physical communities where ideas can be shared and shaped. Obtaining membership into entrepreneurial communities can develop social capital resulting in enhanced reputation, creation of trust, development of currency and ability to leverage networks. Though there are ample tribes for entrepreneurship on the outside, the need is just as strong yet lacking on the inside in most cases. Successful entrepreneurs borrow a term from interaction design. Then they exhibit this term as a communication technique called progressive disclosure. Entrepreneurs sequence information and actions across several groups by starting with only a small subset of essential people and then spanning out across their broader networks. Outside entrepreneurs progressively disclose to get early validation of their idea, while entrepreneurs inside use progressive disclosure to build consensus and get access to organization resources and talent. To be successful as an entrepreneur, you will require iteration and experimentation. However, you should be aware that the language used to describe this aspect is centered on the concept of failure. Failure in the sense of setbacks, false starts, wrong turns, and mistakes. Iteration is a cyclic process of prototyping, testing, analyzing, and refinement. Building knowledge through experimentation with a goal towards learning and shaping rather than killing and burying the idea or project. Entrepreneuring framed as failure is scary and often leads to inaction. Framed as intentional iteration, it creates a mindset that is prepared for and expects multiple learning moments. Entrepreneurs outside the organization consider financial loss as the biggest risk. But entrepreneurs inside can be paralyzed by a fear of losing their well-earned social capital and social reputation. Remember, it takes a lot of hard work to build a social reputation. Entrepreneurs inside and out manage potential loss in various ways, from working on multiple opportunities at one time to identifying spaces of permission inside to work on the idea. A careful entrepreneur considers what's at stake overall. Sometimes the acceptable loss can inspire a different type of calculation, which is calculating what you are willing to lose to take a step forward. Past educational experiences and even corporate experiences hinder rather than encourage entrepreneuring. unlearning habits from previous experiences is necessary, especially when these habits conflict with the experimental and iterative nature experienced by most entrepreneurs. Entrepreneurs outside tend to do first and then learn from that doing, while those on the inside have to worry about being held hostage by organization history. Now, do you understand what are basic necessities of being a successful entrepreneur, Anil?
Yes, Divya ma'am. This was indeed a very beautiful passage of entrepreneurship practices that you have explained. I have now learned so many new things. Thanks.
You are most welcome, Anil. Anil, do you know that to be a successful entrepreneur, one has to show his or her dynamic abilities in work?
No. Divya ma'am, what sort of abilities, may I ask?
To succeed in entrepreneurship, one has to know so many things. Let me tell you what entrepreneurship involves first. Entrepreneurship involves organizing, managing, and assuming the risks pertaining to your enterprise. And an entrepreneur is one who is involved in all of these. To be able to do all of these, an entrepreneur is required to have a set of skills and character. Let me now tell you about 5 questions that one can ask anyone who wants to be an entrepreneur.
What are they, ma'am?
The first is, are you comfortable stretching the rules? The answer is, entrepreneurs might be more willing to bend the rules. Many success stories are based on audacious entrepreneurs using some outrageous tactic to swing a crucial deal or find the resources to get an idea off the drawing board. Now, do you have the stomach for bending the rules? The answer is, you can bend the rules, but you can't break them. The second question is, are you willing to make powerful enemies? The answer is, many entrepreneurs prefer to go after market niches that incumbents have overlooked. But they are not afraid to make powerful enemies. The size of their rivals will not stop them from going after what they want. The third question is, do you have the patience to start small? Building a business takes longer than it takes to generate the idea for the business. It is important to stay the course, to build the idea and see it completed. It requires a lot of patience. Entrepreneurs should be greedy to grow big, but this needs patience as well. The fourth question is, are you willing to shift strategies? The answer is, smart entrepreneurs recognize that a new venture gains credibility more by simply surviving rather than doggedly following its original strategy. They are quick to recognize when they have to change course, and they seldom hesitate to do so. A good strategy is important, but if it does not work, you often have to shift from one strategy to another very quickly. The fifth question is, are you closer? Successful entrepreneurs know how to seal deals. They have the ability to come in, often at the last moment, and elbow their rivals aside. They know exactly what they must give up and what they can get away with, while finalizing deals under pressure. Do you know what exactly entrepreneurship is?
Well, it is about creating your own business enterprise.
Yes, of course. However, there are a lot of things one needs to know before starting a new venture. Let me tell you what it involves. While starting a new venture by yourself, it will involve organizing, managing, and assuming the risks pertaining to your enterprise. New ventures are mostly based on new ideas. However, what is new varies. It could be new to geography, new technology, and business models. Or it could just be new business models or just new technology or simply neither. An entrepreneur is one who is involved in all of these: managing, organizing, innovating, assuming risks. Entrepreneurship is an opportunity to create wealth. Do you know that 4 out of top 5 billionaires are entrepreneurs? 7 out of top 10 billionaires are entrepreneurs. 16 out of top 20 billionaires are entrepreneurs. Hence, we see that entrepreneurship is a credible way to create wealth for yourself. In other words, it helps you to get rich very fast. A new venture simply cannot be created just by a cool idea. Very few ideas succeed. In a study of about 3,200 startups in the Silicon Valley, about 92% of startups failed within the first 3 years of starting. Success also depends on how these ideas are packaged as products and brought to the market. Entrepreneurship differs from a standard managerial career that most people want to have or aspire. It is more unstructured compared to the working in an established firm. Established firms present a relatively structured environment. Business is based on established business practices or routines that have been in place for quite some time, and people are familiar with it. While in entrepreneurship, because ideas or business models are new, there is no precedent. This means that they operate in relatively unstructured and uncertain environments. Decisions may not be right or wrong, but there are trade-offs. Here is a table that shows the difference between traditional career path managers and entrepreneurs. It starts with motive. While a traditional career path manager seeks stability with little risk, an entrepreneur seeks to get rich even if it involves high risk. When it comes to activity, a traditional manager believes in delegation and managing. An entrepreneur manages by doing things himself. When it comes to failure, a traditional manager simply wishes to avoid failure. But for an entrepreneur, failure means one experiment is over. The next is just around the corner. When it comes to decision making, a traditional manager follows upper management. But an entrepreneur actively makes his or her own decision.
That was really very interesting, Divya ma'am. Now I know what it involves to be a successful entrepreneur. Thank you so much.
You are always welcome, Anil. Anil, do you know how to identify business opportunities?
No idea. Divya ma'am, how can one identify business opportunities?
Well, most business opportunities starts with an idea. It is this idea that develops into business opportunities. Let me explain that to you. Now, what is an idea? An idea is the content of cognition. Is every idea an opportunity? An idea clearly needs to be valuable as well. An idea connotes exploitation of a customer requirement. Why should we evaluate an idea? In an entrepreneurship, an idea is concerned with the discovery, evaluation, and exploitation of profitable opportunities. Successful entrepreneurship requires the ability to balance technical knowledge and market knowledge. Many people have technical knowledge and neat ideas based on their technical knowledge. But they seldom address an opportunity. It is hard for them to know if the idea is required right now or later. Is there a need for your cool technology? This question has to be asked for every idea generated. There may be many ideas for businesses, and we need to think of these. Of all the things that are possible, which are the ones where the difference between what customers will pay and what it will cost to make is the greatest? The more unique the opportunity, the more is the payoff, if it is implemented properly.
Divya ma'am, how do we recognize or create an opportunity?
It depends upon how valuable is the opportunity. The questions that arise after the opportunity is identified are how do we know it's valuable and valuable for what? And how do we exploit it and where? It could either be exploited in an industry or market segment. After that comes the question of when. That is, can the idea be exploited in a market's evolution? And how? It means what exactly to produce and how to charge. Next comes the tactics. What type of tactics has to be applied in financing, exits, and growth rate and appropriating rents? With what effect? Opportunity discovery needs some luck too. The odds can be managed once it is discovered. We need to remember to be prepared for the opportunity. Just luck will not be enough to achieve success. Also, once an opportunity is discovered, then you need to know what to do with it.
Divya ma'am, I have heard that markets grow at different rates. Is it true?
Yes, Anil. All types of markets grow at different rates. The idea is to identify a market that is structured and stable, but is still growing, and it does not require a very large capital outlay. The graph shows the market size and how it grows along with time span. Markets can be divided as large market size and growing market. You need to identify a market niche that provides high value to customers so that to achieve success as an entrepreneur. Customers are reachable and can be addressed. There are no major brand loyalties if you know how to reach out to your customers. The payback to the customers can be identified and is repeatable. The benefit to the customer in monetary terms exceeds or at least covers your costs plus a reasonable profit. Potential for product expansion and being a market leader. Industry should neither be highly concentrated or highly competitive. After identifying the market potential, you need to concentrate on economics.
Economics? How can this factor play a role in entrepreneurship, ma'am?
Let me explain that to you. Economics flows with time. You need to check the time for positive cash flow. Cash flows, simply put, is the difference between the cash that flows in and cash that flows out. Upfront, the capital needs to be low. Research and development requirement, both initial and ongoing, needs to be low. High gross margins is the difference between the selling price and the cost of manufacture. The personal harvest is what is in it for you. The venture should be high strategic value to a potential acquirer. Pharmaceutical firms acquire entrepreneurial firms for more than what it is worth because it is of strategic value for them. Many times, technology startups that have accumulated losses and modest sales get acquired for many times their worth. Strategic value comes from having important customers, distribution, or a proprietary technology that has strategic value to an incumbent in an industry. Does it cover your opportunity costs? The money that you will make from your personal next best option plus other non-monetary things that you will be giving up. Competing with incumbents is called competitive advantage. The questions that arise here are: can you compete with existing players if they enter? Can you produce at low costs? Can you achieve economies of scale? What are the entry barriers for your competitors? When you can calculate all these, you will become a successful entrepreneur.
That was really very informative, Divya ma'am. I will note these down. Thanks.
You are always welcome, Anil. Anil, do you know what long-term orientation is?
No. Divya ma'am, what is a long-term orientation?
A long-term orientation is adaptation to knowledge learned while being an entrepreneur. Over the years, you will learn so many new things that you will learn how to adapt to new things. Discovering an opportunity is a combination of personal characters and knowledge learned. Individual traits that matter in entrepreneurship is what we call stable characteristics. Some personal preferences to be entrepreneurs are risk-bearing and tolerance for ambiguity. A lot depends on ability to evaluate new information, for combining what you know with new information to see means-ends relationship, which can be like, see how to fix what's broken or improve on what's out there. Anil, you should know that a subjective process is built on a person's particular capabilities.
What kind of capabilities, ma'am?
Along with a person's particular capabilities, it is a subjective process that builds on what a person knows or the knowledge that he or she can absorb. This subjective process grows stronger with time and experience. Substantively, like molecular biology, a particular market can be built over a person's particular capability. Procedurally, you will have to adapt to management with new interpersonal skills. What help here are whom you know, what are the weak ties, and what sort of creativity you have achieved so far. Now, let me tell you about absorptive capacity.
Absorptive capacity? What is it, ma'am?
Absorptive capacity is the ability to evaluate, assimilate, and exploit knowledge. This comes from prior related knowledge to be able to make sense of, recognize the value of, and use new information. If you do not have some key expertise at the outset, the risk is you will never acquire it in time. So, to be ahead of times, you need to acquire prior knowledge about the market. Prior knowledge contributes to expectation formation. Your understanding of past signals regarding the importance of a knowledge domain affects your decisions on whether it's worth investing in. If we only revise expectations once, there is a more popular understanding about its value. Often it is too costly. This is because learning is cumulative or too late due to competitors. Anil, do you know what service promise is?
No, Divya ma'am. Not thoroughly. I just have a rough idea about service promise.
Then let me explain that to you clearly. Service promise is the assurance given to the customer about in-time delivery of assured quality and quantity of product. Here are the constituents of a service promise. First, of deliver what customer wants. The process of delivering is how it will be better than others. It should consist of clear, concise, and easy to understand. Next, it should be memorable, meaningful, and achievable. Then, the service promise should be consistent with company's mission and goals. In other words, a service promise is a promise made by the business to the customer about a quality product to be delivered to them in time. It is the message that the business gives to the customer before making purchase decision about the product. The service triangle includes 3 dimensions, which are internal marketing, external marketing, and interactive marketing. You can also notice the relationship of the company, employees, and customers in the service marketing triangle. It states that companies make promises to customers, but these promises are delivered upon by the employees. If companies take care of their employees are more likely to work diligently to take care of customers who were attracted to the company by external marketing.
Are service promises that important for an entrepreneur?
Definitely, Anil. Any entrepreneur should set targets for service promises. Target setting starts by encouraging consistency in services. Next, identify rewardable standards. After that, enable measurement of performance. To satisfy a customer, it is important that customer expectations are met. The service delivery should meet or exceed service promise. Service promises enable both customers and employees to set targets. For customers in terms of their expectations and employees in terms of goals to meet. As service promises are documented through the messages communicated to customers, they make sure that expectations are consistent. Employees have to ensure that the external communications are not proven false. They consistently have to deliver on them. Customers know that the business should be rewarded if they perform above service promises. And as they constantly compare the employee's performance with the promise made, the performance can be measured easily. The next job is to set the promise.
Set the promise? How can we do that, ma'am?
Let me explain that to you. To set the promise, first identify customer needs. Then match customer needs with product features. Always set realistic expectations. These expectations include traditional marketing communications, sales and promotion, advertising, and internet and website communication. To set the promises, companies need to identify customers' needs as well as their own competencies and match them. Once they are able to find product features solving different customer needs, they need to ensure that the message is communicated to customers about service which can be delivered at all the levels across all the channels. Next comes enabling the promises. To enable the promise, one has to hire the right people, then train and develop recruits to deliver service. You will also have to check about employee empowerment. This can be achieved by providing appropriate technology and equipment along with rewards and incentives. The promises that are made can only be delivered upon when the employees are enabled to deliver on these promises. Next comes delivering the promise.
What does one require to deliver the promise, ma'am?
To deliver the promise, you will require service excellence, reliability, responsiveness, empathy, assurance, tangibles, and customer experience. For a customer to feel satisfied with the service, it is essential that service providers are reliable, responsive, empathetic, and assuring to the customer. And tangible components of the service are designed to enhance service experience. The customer experience when customer interacts with the business that different points decide depends on if the promises set by the company are met or not. If the expectations are met by the service, customer is satisfied. If service experience is not as good as the expectations were from it, customer is dissatisfied. But if service experience exceeds the expectations of customer, they experience delight. Now, Anil, There are strategies to deliver promises to customers.
What are these strategies, Divya ma'am?
Strategies are structured by step-by-step processes. Let's check these steps out. Now, to deliver on promises to the customer, it is important to meet their expectations. Firstly, you need to listen and take action. Use analytics to constantly understand customer expectations and try to meet those expectations. Next, ensure communication between different customer-facing departments to have a holistic understanding. If any promise is broken, apologize and thank customer for bringing it to your notice and reward them by making up and beyond the expectations. Get employees involved to understand customers and setting standards. Practice your plans consistently. Reward and recognize employees. Revisit standard and update if needed. Train to standards. Anil, do you know why should an entrepreneur identify customer needs?
Not very clearly. Can you explain, ma'am?
First of all, needs, not products, are relevant to consumers. The motive is to drive the customer's purchase decision. This ensures customer satisfaction and loyalty. Unique customer needs are not clearly defined. It changes over time and across customers. Innovation following customer needs is of value for business. This results in less customer grievances. Customers are guided by their needs in their decisions to make or not to make a purchase. Customer needs are important for businesses as the products or services which are designed around the needs of the customers are able to satisfy the customer in the long run. While products are standardized, customer needs are unique and may vary over time. For example, a customer who might need a normal smartphone today will need a high-end smartphone in some time because their job roles has changed. Following customer needs helps businesses offer solution that will be of value to customer and hence to the seller. For example, cab booking services like Uber and Ola came into existence and are successful because they cater to the need of easy transportation booking. Anil, do you know what exactly customers want from products that you may endorse?
Not exactly, ma'am. What would customers expect from the manufacturer of the products?
A number of things, and most of them are hidden. This is an important factor in business to understand the customer's need from products. For that, one has to know a number of things. These numbers of things can start with functionality. Does it solve the problem? Then the price. Does it fit the budget? Next is convenience. Is it a convenient solution? How is the user's experience? Then comes design, reliability, performance and compatibility. At the end comes efficiency. Is the product efficient to use? Customers need functional solutions from a product. Like, if the customer's need from a phone is to have better pictures, does the product have a good camera quality? It should be convenient to procure and the use experience should be reliable, up to the expectations, and should be compatible with other products that customer uses. For example, the new app you are trying to sell should be compatible with the customer's operating system like Android, Windows or iOS. Are the employees trying to walk in the customer's shoes is what customers need primarily in services? For example, if a customer walks into a bank for an urgent transaction and the employees try to cross-sell other products, customer feels frustrated and not in control of situation. Hence, the employees need to be empathetic towards the customer and then act. This will ensure fair terms, transparency in any product-related decisions, and educating customer properly about the product or service alternatives. Now, let's discuss about customers' need from services.
I believe it is quite similar customers' needs from products, ma'am.
Well, no. A customer's needs from services is altogether different. Let me explain. Firstly, it is empathy. Do employees understand customers? Then comes fairness. Are the terms fair for customers? Also, you need to check transparency. Is the organization transparent about product-related decision? The next level of factors an entrepreneur needs to know is control, options, and information. Does the customer feel empowered? As options, do they have alternatives or variants? As information, do customers feel educated about the product or service? After that comes how to identify customers' needs. For that, use existing data to understand needs. Ask the employees at customer point of contact to identify the needs. Then map the process of product use. The question that arises are, what are the steps during product acquisition, use, and disposal? Then comes what the pain points are. These can be done by observing the customer and by interviewing the customer. After that, you need to conduct a survey and also maintain a diary to check customers' needs. The diary should be maintained to identify root problem and not symptoms. Ask why. Check the means ends analysis, competitors analysis, and customer need analysis. To identify customer needs, businesses should start with pre-existing data such as customer reviews, complaints, and feedback. The business should then try to closely understand customer needs by first talking to people who get in touch with customers like salespersons. Then, check customers themselves and try to understand why a customer would buy your product and how he or she plans to use it. When it comes to features, benefits, and values, the company should look at the matter carefully. In this process, the businesses should focus on understanding the real underlying reasons and also map different points in the process of a customer's interaction and use the pain points to cater to customer needs. Anil, do you know how a customer defines value?
Well, no. How does a customer define value, ma'am?
A customer defines value by looking at the universal acceptance. The question that may arise here are, does the product is well worth across customers and across time? Is it actionable? Is it clear and objective? Does it state just the need and not the solution? Value must be defined and measured from the customer's perspective. Otherwise, it is a useless input for identifying hidden opportunities and carrying out other marketing and development activities. The need definition must be relevant to all customers, regardless of geographic location, gender, and income level. The underlying need for a product must not change quickly over time, or it will be a moving target that is impossible to hit. Merely finding out that a product must be more reliable, comfortable, or easy to use, inputs that each customer will define differently, does little to guide the actions of engineers and designers. If you can't measure value, you won't know if you are on the path toward creating it. A customer requirement must be precise and clear enough so that all who read it arrive at the same interpretation of its meaning. An unmet need may not be identified if it contains a solution. Now, let's learn how to write a customer's need statement.
Writing a customer's need statement? How do we do it, ma'am?
Let me explain that to you. Customer needs to be written as the job they want to get done. Need statement must not include solution about technology, product, or service feature. The need statement should be brief and not so ambiguous. It should be consistent at the same time. This need statement acts as the input for design, identifying value proposition, and for selling. You should remember that there is no consistent standard that defines just what a need is, what its purpose, structure, content, and format should be. Although companies talk to customers, the inputs they gather differ in purpose, structure, content, and format, introducing variability that can derail the innovation process. Next, it is important to shift attention from the product and instead focus on the requirement gathering efforts on the execution of the job that the product or service is intended to perform for the customer. Solutions are the means by which unmet needs are satisfied. Hence, solutions cannot be part of the need statement itself. The solution statement must not include words that may be interpreted differently across a customer population or across functional areas within the company. This could lead to disagreement as to the intent of the requirement statement. Same words should be used for any action, object, or activity across different statements and should be in a consistent format. Now, Anil, let's learn how to solve customers' needs.
Can you explain what the criteria to solve the customer needs are?
Let me describe some of the requirements in this sector. To solve customers' needs, first, there should be no communication gap. Secondly, to check the comfort of the customer, there should be consistent internal and external communication. The next stage is educating the customer about the product and at the same time helping the customer adopt the product post-purchase. Some other requirements are to identify the ideal customers, then nurture a good relationship with the customers. To check that all the customers are at comfort with your products, you will require a proactive service structure. Then you will need to formulate the communication strategies. Communication strategies are formed by customers' feedbacks and by using customers' complaints, suggestions. This will help you understand the customer's requirement. Identified customer needs have to be leveraged by solving those needs for the customers. While businesses try to cater to customer needs through product innovation, not all customers need such solutions. They need to ensure not creating inconsistent needs by multiple communication about product or service and make sure that customer is aware of what all needs the product or service can solve. Though companies should try to build customer relationships, they should do so only with the customers that are valuable to the business. Also, be aware that not all customers are important to businesses. So, those customers need to be identified who will be of value in the long term and need what the product being offered can solve. This brings in the notion of what the customer is willing to pay for the value being provided by the product or service. After knowing so much, Anil, I would like to bring all the factors together so that you can analyze the factors better.
That would be great, Divya ma'am.
All customers need someone to guide them about successful innovations. First, acquire clarity on customer needs in terms of product and service features. Next, to identify customer needs, get the secondary data from either the sales team or employees in the production floor. Use employees at customer touchpoints. Ask the customer about their requirements from the product that you are selling to them. After that, analyze the competitors and their products that they are endorsing. After analyzing the competitors, you need to define customer needs clearly to your employees. The next level of work is to solve those of value. For that, you require to be consistent. For that, you can educate customers and build a long-lasting relationships with them. Overall, it is important for businesses to identify customer needs, as these needs guide innovations as well as customer satisfaction with existing products. For identifying these needs, businesses should use both available secondary data to data acquired from customers and competitors. Once these needs are identified, they need to be clearly defined, and those which are of value to customer should be solved consistently. Now, we will discuss how the seller or entrepreneur should approach questions and concerns from the customer.
Yes, ma'am. How should we handle questions and concerns of customers?
Let me explain that to you. Handling questions and concerns of customers is an important phase in the selling process, as it involves being aware and also being prepared to make the difference between trying to push a product versus the customer themselves asking for the product. Selling is most effective when you are seen as an advisor. As an advisor, you really don't need to peddle the product to the customer. As you gain more experience, you can become a trusted advisor to the customer. When the customer has developed a deep faith in you, sales happen automatically. The question now is how to become a trusted advisor. For that, you need to understand the concerns of customers. You need to be able to answer questions of customers confidently. At the same time, you need to address concerns of the customers. The key to success in selling is when you can become the solution provider and as well as the trusted advisor of the customer. As your relationship develops with the customer will see you as the source of information and solution. Then, the customer himself or herself will ask for your product or service. It is simple if you can work that out. For example, a customer wants to apply for a passport but does not understand the process. If you are able to give correct information, anticipate and handle the customer's questions and address his or her concerns, the customer will see you as a trusted advisor in passport services. He or she will automatically approach you for passport application help. Now, how to anticipate the questions of the customer? Well, don't wait for the customer to ask questions. Anticipate the questions yourself and prepare answers for the customer. You can do that by making a list of frequently asked questions or frequently asked questions simply called FAQs. Based on past experience, you can also prepare a list of questions which are common but important. Many times, you will find that some simple questions may have complex answers. For that, you need to think of follow-up questions and their answers. That would be homework for you to please the customers in their requirements. Now, we will learn the art of making a sales pitch.
Ma'am, how should we make a sales pitch that can win customers?
For that, you need to identify the areas that make a sales pitch ineffective. First, describe to the customer about the company. This will be who are, what we do, who do we serve, and how we do it. Then describe to the customer about the product, as to what the product is and how good it is. Who else is finding the product good? If you can win the confidence of the customer, it will be an achievement, recognition, as well as success for you. For a typical sales pitch, one of the important things is about selective listening. There should not be any information fatigue. If the customer shows disinterest, then it is all due to lack of clarity about seller's focus. Before you draft next sales pitch, ask who is the audience. Then try to understand their background and what do they do. Next, try to understand who they sell to if or when they do. Then try to understand what their processes are. Then you can understand what their problem is. When you understand their problems, you will know what their needs are. You can also find out what the issues are arising out of these needs. This will lead to the question how you can help to solve their problems. How can your services or product help solve their needs? This is the structure of a good sales pitch. It all follows step by step. First comes the hook, then objective, roadmap, problem, solution, product, summary, then why us, and at the end, what is the nature of the business.
Ma'am, How can we create a good hook to pull in customers?
Good question. Let me describe to you the strategies for constructing a good hook. I will also explain to you the rest of the structure. Start with an undeniable and important to client truth. For example, for a client who uses technology for all their activities, starting by saying technology has changed our lives, followed by a contrasting statement that makes client wonder. Mention that the constant calls, mails are all like enemies. Follow by explanation and plant the solution you're about to offer. For example, technology-based communication have taken away the human touch from communication and treats everyone the same way. And hence, we need to have options that helps having real conversations. Now, for fixing the dichotomy, start with an undeniable and important to client truth. For example, for a client which deals in event videography, saying drones have helped capturing the events in better details. Follow by something of concern for the client in that context. For example, crashing a drone is a frequent phenomenon and costs a lot to the buyer both in terms of cost of drone and missing on capturing important details. Follow that by planting the solution to discuss in detail later. For example, the users of drone need a short training to make sure that they can use it well and prevent crashes as much as possible. Next comes the story. Start with the story where there was a problem. Follow how the problem was solved. Start by an unrelated question like, what is your favorite TV show? Follow by connecting to the current problem. As flattery, start with praising the client, establishing what makes you interested in serving them. The objective and the roadmap is about what does the client get from listening to your presentation. As an example about technology leading to conversations not being real anymore, follow by saying, today we will discuss how business conversations can be made real on technological platforms. This will help you in XYZ ways. Follow by quickly giving a roadmap of the main presentation and the time required for it. To handle the problem and solution, present your understanding of the problem. Ask them to define the problem. Question to understand the underlying need. Describe their need to them, integrating their inputs. Probe for what an ideal solution will be. Describe what you think an ideal solution will be. Seek agreement on the ideal solution description. About the product description and summary, start with how is the product being offered is a fit to the solution. Describe solution and not features of the product. Use stories of solving similar problems for other clients. Use testimonials describing product if available. Summarize the needs defined, the solution described, and product fit with the need. When it comes to why us, start with awards and recognition. Follow that by background and company's journey. You can start with company's journey by differentiating you from competitors. Give examples like innovation, prompt resolution of issues, fair pricing, and customized solutions. Provide testimonials if any. Alternatively, post summary. Ask about what are they looking for in their service provider and then position yourself in that description. What is not asked is often not given. Don't leave the pitch without asking for a close. How do you want to proceed? Use questions like, do you want anything else from us before making a decision? Does our product solve your requirements? In the end, you can ask them for how do they want to proceed from here. What next do they want to do? Try to get an idea about their interest to purchase even if you don't ask them if they would buy your offering. Now, let's look at what the marketing challenges and solutions are.
Are challenges and solutions in marketing interconnective, ma'am?
Yes, Anil, you will soon know. Now, let us identify the major marketing challenges faced by businesses and equip them with solutions to meet these challenges. First of all customers differ according to managing customer heterogeneity. All customers change according to managing customer dynamics. All competitors react according to managing sustainable competitive advantage. All resources are limited in accordance to managing resource trade-offs. Due to environmental factors such as customer characteristics, competitors' action, and limited resources, there are some major tasks that businesses have to manage. Because all customers are different, businesses have to manage heterogeneity. Because customers keep changing constantly, businesses have to manage dynamics. Because competitors fight for the same resources and customer base, businesses have to manage with the same resource base and build sustainable advantage. Marketing challenges starts with generating traffic and leads. Then, one also has to look at returns on marketing activities. Some other challenges are securing enough budget, website management, right technology for the needs of the business, international content creation, and training the team. The most challenging tasks that marketers have to face are concerned with identifying the customer and being able to attract that customer such that the investment on marketing activities earns returns. These challenges are pervasive across all platforms. And as the audience for any business in today's digital era is international, firms need to have content which targets and serves international audience. Then there are also issues. There are issues on how to create demand while generating traffic and leads. Looking at the wide array of alternatives, it is difficult to identify the focus areas. Ascertaining good quality product by identifying customer needs is another challenge because you will also need to bring it to target audience's notice. There are also issues in returns on marketing activities. One of these issues is it is difficult to track investment on every marketing activity. You can take action by linking marketing activities and sales results by creating a loop between marketing and customer relationship management or CRM software. Securing enough budgets is another issue. It is difficult to get money for marketing activities for smaller organizations. For that, you can take actions like working on calculating ROI or return on investment, creating successful inbound marketing, or by efficient marketing strategy. Website management also faces issues like writing and managing content, attracting audience to website or audience engagement. To create a successful website, you can optimize loading time, use freelancers to develop content, host website on a platform that integrates all the marketing channels. Right technology for the needs of the business also has issues. It is because feedback on technology is scattered. Multiple needs require multiple technological solutions. The actions you can take here is to use marketing automation software. Also, you can use platforms integrating different software and technology being used. Targeting content for international audience also faces issues. There are issues like identifying the ideal target. Another issue is how to organize and optimize platforms for audience of different countries and cultures. The actions you can take here is to identify the growth markets. Do not target all markets, but the ones that are right for you. Also, explore and integrate local trends for international audience. The issues you may face while training the team are trainings getting obsolete as technology and trends get obsolete too soon. It is also difficult to identify relevant trainings in different time and cultural contexts. Here, you can take actions like evaluating team's current status and required improvements. You can also identify who to recognize and who to coach. At the end, bringing it all together, attract and holds customers' attention. Drive meaningful engagement and growth. Reach right people at the right time. Set and follow priorities first and differentiate yourself. Also, kill a campaign when needed. Anil, you should also know that for a product to be successful, you need to have a matching solution as well as contacts.
A matching solution and contact? How can I achieve that, ma'am?
For a product to be successful, it has to find market fit. For a solution to be successful, it has to fit the customer's need, specifically meeting their goals. It's the job and responsibility for sales management and marketing leadership to ensure they develop best practices to match products and solutions with market and customer. First, you need to understand the current situation of the customer. Identify how customers operate and what are the solutions they use now. What does the customer use? Next is, what are the procedures? What is the volume of purchase, cost of purchase? Then, identify the problem. Based on customer situation, identifying pain points in their situation. After that, it is time to implicate the problem. How do these pain points manifest in customer's need for solution? Which is, what does customer go through because of these problems? Then, you will be able to understand the need. Identify what is it that customer needs to solve these problems. A sale is all about the customer. Therefore, identifying the pain points for customers and at what level will these pain points cause customer to adopt your product. The first step required to match products with customer needs is to identify customer needs based on psychographic, demographic, and behavioral data of the consumers. They can be segmented into different groups. It is easier to identify common needs for these groups. Analyzing customers who left at various points and their concern might help in understanding needs of other similar customers. Identify needs of customers based on related product purchase. Like, someone who may purchase a smartphone may be attracted to similar gadgets. That could be a point of sale. When salesperson personally interact with customers, understanding customer needs is possible through asking them questions and moving from what to why. But then, there are needs to be understood for a wider customer base instead of unique individuals. There are different ways of identifying customer needs. Secondary data is one efficient and cost-effective way. But at what points secondary data will be of use still needs to be understood. Now, there are some points that attributes to matching solutions for customers.
What are these points, ma'am?
These points are customer attributes, psychographics characteristics, demographic characteristics, shopping history, point of purchase, brick and mortar store, online, telephonic, product and service characteristics, type of product, variant, volume and quantity, organization's goal, customer loyalty, increased sales and revenue. Based on customers' data, businesses can offer highly customized solution to the customers at the right time and through the right channel. Next, best offer matches the organization's goals and its product features with the customer characteristics and their choice of channel. To achieve a match between organization's expertise and customers' requirement, it is important that businesses follow these steps. What does the firm wants to achieve? For example, a business which wants increased revenue will not use the same strategy as the firm which wants to build customer loyalty. Analysis of customer data and identifying the need and requirement to predict future purchases. Analysis of customers also helps in delivery of the offer in person or online, at what time and how. Learn from experience with customers. Identify problems and potential. Experiment to improve experience. NBOs or new business opportunities are designed to inspire a purchase, drive loyalty, or both. They can be products, services, or relationships. Selling is not just about making a sale. There are a number of points which needs to be taken in account.
What are these points, ma'am?
These selling points are presenting the offering, solving doubts, closing, building relationship and follow-up. Building an NBO can be of use to the business when the salesperson can sell the product or service and relationship as well. Selling comprises of both pre- and post-purchase. While presenting the offer, match features with benefits. Here, you need to describe product features, describe the benefits derived from those features, and also link these benefits to the needs identified. Make the product appear appealing to the customer. Make customer try the product if possible. Else, guide them through the usage experience if possible. While in the process of identifying customer needs, salesperson makes customer cognizant towards their needs. But only when the product is presented such that product attributes are matched to the customer needs, selling is effective. To solve customer doubts, salesperson should know well about the product and its features. Customers often compare the product with other alternatives available. To answer questions such as these, the salesperson should be knowledgeable about competitors' products as well. Listen to the customer to understand their concerns. Salespeople need to actively listen to the customer and acknowledge their concerns before answering them. When you present the product, positioning it against the needs identified, customers are bound to have some queries and concerns. At this stage, the businesses need to have both knowledge and skills. Before closing the sale, reconfirm about doubts. Ask the customer once for any other doubt. Ask for action to obtain an agreement from customers for buying. Help customer make purchase by offering them any help they need, such as credit, installment option. If some other product can be sold to the customer now or later, talk about it. Based on resolution of doubts, customer either chooses to buy or not. It is important that the salesperson asks for a sale to the customer because often what is not asked for is not given. Now, we will discuss about follow-up and building relationship with customers.
What are the main factors for building a good relationship with customers, ma'am?
There are a number of points in building a relationship. Here are some. Home delivery, demonstration, post-purchase doubt resolution, deliver on promises, check on customer satisfaction, maintain contact, special occasion wishes, ask for suggestions and feedback. The relationship with customer is important even after the purchase is made because a satisfied customer spreads positive word of mouth. It is much less difficult to retain a customer than acquiring a new one, and it's easier to serve needs of a customer you know than identifying needs for a new customer. In your own business, always listen to the customer and identify their needs. To match product with needs, you need to build a solution. Inform customers about the solution, not product. After that, clarify doubts and then ask for purchase. Similarly, continue to serve customer post-purchase. Anil, do you know what value is in business?
No, ma'am. Can you explain?
Value is determined by the customer due to the use of a product or service provides for him or her. It is important to note that the same product may serve different purposes to different groups. It is possible that the customers themselves do not consciously think of or understand the value of some product or feature. One may ask, as what is the advantage of adopting value perspective? The answer is, it helps to have a clear differentiation. It also helps customers to understand how much they benefit.
This is indeed a great information for aspiring entrepreneurs, ma'am. Thanks for so much information.
You are always welcome, Anil. Anil, do you understand clearly about the importance of delivering on-product service promises?
Not that clearly, ma'am. Can you explain that to me properly?
Definitely. It is a very important segment of the company and customer relationship. Now, the question is, why you think the customer is purchasing from you, since the same commodity may be available in any other shopping outlet which are run by your competitors? This is only due to the reason that the customer values the product or service you provide. This could either be motivated to the customer by the fine service you provide or the fine quality of the product that you manufacture. The customer indirectly put a value to your product or service. This means a huge achievement to your business. Now, value may be from consumption of products or services that a company provides to the customers. This value is equitable to money. For example, if an outlet provides services like getting phones freely recharged, then many customers will visit that outlet to get their phones recharged done quickly. This will enable them to talk to their family and friends. This will make the outlet very popular. Value could arise also from using something else that customer wants to achieve. For example, if the facility to apply for Aadhaar card is available in a single outlet, then most customers will visit that outlet instead of going anywhere else and fill up the necessary forms. Value is not what you provide to the customer. It is always the customer who suggests the value for your business. For example, if we talk about the features of a smartphone, it is what the customer derives from the features. Now, all smartphones have many features and not all of them are of use to all the customers. Some features may appeal or may be of use to some customers and some features may of use to some other customers. So, the value of the smartphone will be valued differently by different sections of the customers.
So, ma'am, value of any commodity or service is always from the point of view of the customer?
Definitely, Anil. It is the customer who decides the value or the worth of the commodity or the service that you or your company may provide. Value is always customer defined. The value of any product is not dependent on the technical and other features you provide in your product or service. It depends on whether the features of any product or services can be used or consumed by the customer. The value also depends on what is the purpose for which the customer is considering your offering. Another important thing about value is that where does this value reside? In the customer's mind. He or she may not even be conscious of the value of the product or service that you are providing. However, if the customer likes the features of your product or service, he or she may put a value on it. So, do you know, Anil, what an entrepreneur or a company can do to put their product or service into value perspective in the mind of the customer?
No, ma'am, not very clearly. What can we as entrepreneur do to put our products or services into value worth in minds of customers?
Well, then let me explain that to you clearly. The question that arises here is, what is the alternative that a company or an entrepreneur can do to put worth to their products or services? From the price-based perspective, you can promote your product or service by advertising that your offerings are cheaper than the competitors. This again leads to commoditization. It is because everyone competes on price as no one is exploring how they are able to differently adding value to their product or service to the customers. The great advantage of adopting value perspective for a product or service is just a clear differentiation or distinguishes between the product and service that you promote from your competitors. Another way of putting value to the product or service that you provide to the customers is by helping customer understand how and how much they benefit. Then you can ask for a share of that benefit from the customers. By this way, you will be able to justify the price or even price at a premium for the product or service that you provide. Now, let me explain to you the value framework for entrepreneurs in regards to customers.
Does this framework work to put value to product or service that entrepreneurs might provide, ma'am?
Definitely. This framework is created just for that purpose. In the screen, you can see the value framework for entrepreneurs. It is divided into 3 parts. First is the value creation. This is where you can create the value for your product or service at the initial stage. For that, you need to check the position of yourself in the marketplace first. Then the customer scope and then the value proposition. The question that arises in the initial stage is, who are you serving and what are your offerings? In the second stage, it is time for the delivery of the value of your product or service. Here, you need to check the operating model of the product or service first so that you can propose the same to the customers. The question that arises here is how you are able to deliver the product or service to the customers. The third stage is set for value capture. This is the time when after you have promoted the product or service to the customers, you can capture or gather the value of your offerings. For this, you need to check the sources of uniqueness of your product or service. The challenge here may come from your competitors as to why won't they copy your ideas or designs. Now comes the part of your creating value to your product or service.
Yes, ma'am. How should we do it?
Let me clarify the value creation part to you broadly. To create value to your product or service, first you need to check who your customers are. Then you need to check what are their characteristics and demographics. Lastly, you need to collect the information as to what problem are they facing. Now, when you try to understand the issues of your customers, you will face some issues yourself. Some of the issues may not even be clearly articulated. To solve this problem, you need to talk to the customers. After understanding the problems or issues of your customers, you need to design or match the product or service that you're offering to resolve their needs. After creating the offerings, you need to check how your offering is addressing the problem faced by customer. Then you will be able to find out how much is your offering worth to the customers. This estimation can be converted into rupee value of your offering along with the services you provide. After the estimation of your offerings into rupee worth, it is now time to check the value delivery to your customers.
Yes, ma'am. I understood. But how should we proceed from this point forward?
Let me explain that to you clearly. How are you going to offer your solution? For this, as we have discussed earlier, how does your product or service stand out from the product or service provided by your competitors? The second thing you need to prove to your customers is how your product or service is different from or superior to the service or products provided by your competitors. While trying to create a value to your product or service, what you always need to keep in mind is that it is less about how do I make money and more about how do I solve the customer's problem. You can also bring in your partners or do partnership business to create products or service to bring up the value of your offerings. Now, let's learn how to capture the value of products or service from the customers.
Yes, ma'am. Please explain that to me.
Value capture comes from first delivery value to the customers. To capture the value, just check that. Does your solution fit into the customer's context? This will include access, mindset, location, culture, and probably geography too of your customers. Next, you need to prove the uniqueness of your business to your customers. By this way, you will be able to explain to them as to what stops your competitors from copying your business. Exclusivity, service, and solution are some of the modes of uniqueness of service or products. If you work keeping these factors in mind, you will be able to capture a part of the value created for the product or service that you provide. This product or service will showcase in rupees terms how much value is created. The price charged is a part of the value created. Customers then will themselves be able to notice how your offerings are different from other pricing models. Price is always linked to how much value you are creating for customers. You can then de-link your product or service from cost, competitors' pricing, margin expectations after the value is created for your offerings. By this way, the value of your offerings will be priced higher in the market. Now, let's check some value elements that you can create for products.
Yes, ma'am. How can we promote products to create value for them?
For products, you need to check the basic elements including the product's features. For example, for the sale of a solar lantern, you can promote it as having no recurring cost, no maintenance, no smoke or danger of fire. By this way, you can create value for the product. In the field of service, the value elements can be created by promoting what is additional to the product. In the same example of the solar lantern, you can create value element by providing free demonstration to understand use and additional benefits like lifetime warranty. In partnership business, value elements can be created by a combination of offerings provided by each partners. This will enable and further enhance creation of solutions for customers. In the example of the solar lantern, you and your partners can advertise it as how it can also work as a mobile phone recharger. Now, let's check how value elements can be transformed to value added.
I believe that promoting the product itself will add value to it.
Well, there are something more. Let me tell you more. To transform value elements to value addition, you need to first understand the customer segment. This is because different segments or groups of customers value different features of a product or service. Which value elements matter to which segments needs to be mapped. After that, you can deliver the product or service which will add value to it. Beside this, you also need to make the customers aware that because of their needs, the extra effort was made to create the product or service. By this, the customers will understand the value being provided by the business. You can promote this needs requirement by communicating in the form of a pitch that identifies the customer's problem and the solution being offered. As soon as the customer understands the value of the product or the service, you can immediately capture the value of your offerings. The communication ends with putting rupee value to the value created, and you can ask for a small share of that in the form of a premium price. This will be your profit.
How can we take our products or services to the Common Service Center for promotion, ma'am?
You can apply to the CSC or the Common Service Center by identifying a few factors. First of all, who is your customer? Are they farmers, students, small businessmen, or others? Then, find out what their problem is. Is it lack of information, lack of service, timely help, connecting with multiple services or providers or others? Next, what is your offering to their problems? Can you provide them with government services, other services through CSC, any other products, services and partnerships that can solve the customer's problem. When you will have an answer or solution to these questions, you can capture the value of your product or service. Next is, who is your competitor for each of your important offering? How are you adding value for your offerings which are better than your competitors? Finally, how are you communicating these to your customers?
This was indeed a valuable discussion on value for products or services, Divya ma'am. Thank you so much.
As always, you are most welcome, Anil.